Hello students, today we are here to study about the one of the important topic of commerce, and that is GST. So today what we will study? In GST we are going to study about the introduction of GST, why GST was important. Next, the important thing which students have a problem every time, that is a cascading effect. We are going to study about cascading effect, what are the types of GST, and as well what are the difference between the previous VAT system and the current GST system. So today I am going to keep the class a very basic one so you can understand GST. We know we call GST as a goods and service tax. Okay, so when it has been introduced, it has been introduced on 1st of July 2017. So to introduce this, one of the important constitutional amendment act has been done, and that is 101 Constitutional Amendment Act. Now, what is the need of the introduction of this one? So we are going to study about the importance of this. So why it has been introduced? See, previously we all know the when the VAT system was there, on the same product multiple amount of taxes has been charged, but now it has been reduced with the help of GST system. So we know there was a fragmented tax system was there. That means a very rate was varied at that time. Though now you will ask me, sir, now also rate is varied. We have a 5% rate, we have a 0% rate, we have a 12% rate. So then what's the difference between this VAT system and the GST system? So we will start with why GST was needed. So as I've said you, so fragmented tax system was there. If fragmented tax system was there, as you can see what I am saying, a fragmented tax system. So it was a problem for the trader also. So as per the goods, that is their luxury goods and different goods, so this different tax slab has been introduced by the government. Now, lack of uniformity was there across state. So in different states, we have a different tax system was there previously. That means if we are going to West Bengal, suppose from West Bengal one good is there, it has been charged at the rate of 4%. The same goods, if you are in the state of Tamil Nadu, it doesn't charge with a 4% rate. That means no uniformity was there. Now next we will study about the important topic that I have said you beforehand, that cascading effect was there. Now what is this cascading effect? Cascading effect means simply we will say tax on tax. Tax on tax means what? Okay. Now tax on tax is, suppose you have already paid 100 rupees for the goods, and again you have already paid 100 rupees. Now for that, again suppose you have paid 4% tax, that means you have already paid 4 rupees, which equals to rupees 104, which equals to rupees 104. Now again if the another seller will sell the goods, now the tax will be charged on rupees 104 rupees. Now don't you think already 4 rupees has been paid as a tax, and on that 4 rupees again extra tax has been charged. That means it's a tax on tax. That's a cascading effect, which GST already replaced this one. That is, the goods become cheaper. Now we will go to next one. That is, what was the solution then? The solution was GST. Now when GST came, the motive was one nation, one tax principle. One nation, one tax principle. Okay, on that, if one nation, one tax principle was there, what many previous taxes were there, that has been merged and only one GST is applicable. Now you will say, Mr. GST, but GST also we are saying sir, many tax slab is there. So I agree with it. But now let's see, if tax slab is there, it's not a big issue. How? Let's see here. Now before that, I will take you to the cascading effect. Cascading effect of tax is really very important. As I've said you, if you are paying, if you are buying 100 rupees of goods, okay, you are paying 4% tax, suppose, so it's 104 rupees. Now if the seller is selling the goods further, it will be charged as 104 rupees plus 4% tax. That means I have said you beforehand that 104 rupees plus 4% tax, which makes it a different rate will come. Now again, if again the seller is selling, another seller is selling to the different buyer, again on the amount what comes after adding 4% tax, again it will be charged on that only amount. So this is a cascading effect which was there. You can see here in old regime, what I am trying to say, which was VAT, cost plus excise were there, cost plus excise plus VAT was there. Now in GST, what's the impact? Here you are paying, but the important thing what is there in this system is input tax credit. The buyer, the person will be able to get a input tax credit. That is very important. So let's, before going, we will study about type of GST in India. So as we can see, the type of GST, we have CGST, we have SGST, we have IGST. Now in SGST, if UT is there, they can have a UTGST. Okay, they can have a UTGST. These are very important. Now let's know what CGST is. It's very simple. Is a CGST is central GST, that means central goods and service tax, which is collected by the central government. SGST is state GST, that is collected by the state government. Now if it is not a state, if it is a UT, then that UT will collect the GST. Now that if you want, I can give you an example of UT. That is, suppose take Delhi, they will take UTGST. Now we have one more, that is IGST, that is integrated GST. Okay, integrated GST, when this is applicable, when we do a interstate sale, when we do a interstate sale, at that time IGST is paid. So we will study about GST council and committee. Now GST council, why this is important, why this committee is important, why we are studying this thing? Because as GST came in India, it has been proposed already in the year 2014. Beforehand of 2014, it has been proposed. But as we can see the name here, Kelkar Committee. Kelkar Committee was the one who has said about the introduction of this GST system. Now, after, even Asim Das Gupta Committee were there, who have made a model and framework of this system. But now government has made a GST council. Now why GST council is important for us? GST council is important because whatever framework we are saying, whatever rules and regulation we are saying, whatever changes we are saying in the system, is all the decision are taken by the GST council. So GST council is very important. Now who will be there in the GST council? Who will be there? You see that is Union Finance Minister, headed by Union Finance Minister. It includes the State Finance Minister. They make recommendation on GST rates, laws, procedure through consensus. That means if that body is there and all the finance ministers are there, they will make the rules in a proper way. Now, next, which is important, if council is there and in our system there is a parliament system, whatever tax regime, whatever system we are seeing, it should be passed from the parliament. If it is passed from the parliament, we call it as a act. Now, which act is there which is going to govern the GST system? Because without act, nothing will come under the jurisdiction. So that is CGST Act, you can see 2070, which is very important. Whatever system will be there for CGST, CGST Act 2017 is there. For SGST, there is having a SGST Act. For IGST, there is having a IGST Act 2017, and there is all total GST compensation to state Act 2017. Why this act is important? Because whenever this GST is paid, now central have to pay back to state if there is a shortage of tax in the system, then let's just as a compensation to the state. So for that, so GST compensation to state act is there. Now if GST, so how the trader is going to pay the GST, how to pay? So there is a portal. Okay, that portal is GST network. GST network, that is a portal with the help of which the tax has been paid and all the accounts are settled via that only. Now we will move to our next topic, that is GST tax rate with example. We will see here with example we will try to see. Now what are the tax rate? As you all know, the tax rate is 0% tax, tax rate is 5% tax, tax rate is 12% tax, 18% tax, 20% tax, 28% tax. Now why this 20? So we will see for 10 with this consumer price basket goods, that is food grains and all, that means 10% of the consumer price basket, it comes under the 0%. That means tax will be charged but it will return as a 0%. Don't get confused with one another term. You will get 0% that comes in the export import section. So 5%, mass consumption is spices, oils. These items will come under the 5% tax slab. Processed food, if we like a cold drink, that is a processed food, then we have to pay 12% tax for that. Now, every day we do brush, refrigerator, smartphone we use, for that we are paying 18% to the government. Now, do you enjoy TV in your home? That is a luxury good. Do you have a luxury car? Do you like to eat pan masala, tobacco and all? That is going to charge you 28%. Now, what is important to know? What is the current development in this? Current development is, what is there in news is government is trying to change some slabs here. What is that? A 12% slab rate is there, which will be moved to a 5% slab rate. That 99% of item which is there in 12% slab will move to a 5% rate, and the item which is there in 20% bracket, 90% of that will move to 18% tax slab. So don't you think government is trying something good? Why? We will know afterward when we will go more deeper in this subject. So this is the basic class. So I have taught you about this type. Hope you are understanding. So you can see from this diagram also, this 5% in the essential goods, that is vegetable, milk, food, grains. 12% you can see packaged food, mobile phone, household appliances. 18% service, telecom, financial service, industrial, intermediate, and your 20% is this luxury cars, drinks, tobacco and all. As I have said you beforehand, it's just a pie graph, pie chart, and it's going to help you. Kindly go through this. It's going to help you a lot. Now, as I have said you, when GST has came, many tax has been subsumed. Many tax has been subsumed under GST. And if it is subsumed, new thing came here, input tax credit. Input tax credit is given. Why this input tax credit we are studying? As we have heard about the cascading effect. Cascading effect. For that, no cascading effect should be there. So government has introduced input tax credit. Let's see what are the tax which has been subsumed under GST. That is central excise tax. You have heard it has been charged for the manufactured purpose. The goods which are manufactured, if it comes out from the factory, the manufacturer have to pay central excise duty. Next, service tax. Tax on service provided, that has also been subsumed in this GST. Next, VAT. As you all know, because of VAT only, we are studying a new thing, that is GST here. So VAT has also been subsumed. So luxury tax, different tax was there, it has been subsumed. Entertainment tax, it has been subsumed. And entry tax and many other tax, octroi, these are there which has been subsumed, and one GST will be charged. Next, let's see what is input tax credit. Just read out this. ITC allows business to deduct tax paid on purchase, that is input. If you are paying tax on purchase, that is input from your side, that is input, that means you have already paid tax. Now, tax collected on sale, that is output. Please remember, on sale it is output and on purchase it is input. Now, let's take an example. If a manufacturer buy raw material worth rupees 100 on which paid 18% rupees 18, that means 18% GST, and then sell the finished good at rupees 200, that means with 36 rupees GST. Now, how much he are paying? He is paying 18 rupees, etc. Why? If that the buyer who has bought beforehand, now he is selling it, already he has paid 18 rupees tax, he will not pay that tax. Okay. If further 36 rupees tax is charged, he has already paid 18 rupees tax. That 18% will be 18 rupees will be deducted, and rest 18 rupees he have to pay to the government. That is a ITC credit. That means in your account that 18 rupees is there. If anyone is paying 36 rupees, that 18 rupees will be deducted, rest of the 18 rupees you have to pay. That is your input tax credit. Okay. Now, what were the tax that has been subsumed? There's just a chart here. You can see, you can take a reference of this slide, okay, which will be there on the side screen. You can see this luxury, entry, local, octroi, entertainment, excise duty, CST, and VAT. Okay. Now, we will study about the GST and a VAT key differences. After this, we will take a glance of what we have studied today. Now, we will study about the differences. What are the key differences between the GST and VAT? What is the key difference? Very important key difference. VAT was a state level tax on goods only. You can see here there is a goods only. But what we study in GST, we study is a tax on goods and services. That means services is also included in this one. That is a very important difference. We should know for VAT there is a goods only, tax on goods only, and there is a tax on goods and services. You can see it's a state level, it's a unified tax. Next we can see here what is this? Origin tax where goods are produced during the time of VAT, from where the goods is produced, the state of origin, tax is to be paid there only. But see what's the difference in GST? It's a destination based tax. That means where the goods will reach. That means the goods is started from, suppose, one place Siliguri, and it's went to another place. Just take an example of uh, Kolkata. If it is going to Kolkata, that means the tax will be paid in the place where it has been reached. That is a destination based tax. Now, input tax credit. Now, you say me whether input tax credit system was there in VAT. That's why here comes the GST. Just now we have studied in that VAT, it was a cascading effect. That's why input tax credit is there in GST. So now see, credit restricted within the state, no credits, service tax or exercise. Now here we have a facility of input tax credit. Simply, it's very simple. We have a facility of input tax credit. Compliances, multiple state specific VAT filing. Filing system was very tough during the VAT system. To reduce that system, to reduce that filing problem, what has been introduced? This GST has been introduced. So it's very simple. Unified tax return system is there. You know, GST portal is there. Once you go, once you file, everything is clear. Everything is clear. So that's why GST portal is there. Even state government can see, central government can see, even the trader can see what tax is there and what is the problem. So we will do a quick revision now. Let's see what we have studied today. We have studied about that implementation of GST was done on 1st of July 2017. First point, with the help of the constitutional amendment, that is 101st constitutional amendment. What is there? We have studied. It's a destination based tax. I think it is clear to you now. It is a multi-stage indirect tax. Okay. Next, replaced many tax. What are the tax it is replaced? We all know. Okay. Next, why GST was needed? Because cascading effect was there. Why? Fragmented tax system was there. Why? Lack of informity was there. So, what was the solution? The solution was GST, and which makes one nation, one tax principle. Okay. Next, we have studied about cascading effect. Okay. Cascading effect, that means tax on tax effect. The solution was input tax credit system, and the solution was GST. Because of GST, input tax credit system came. Next, we have studied about type of GST in India, that is CGST, SGST, IGST. Okay. Next, hope this is clear to you. We have studied about GST Council and committee. The committee which was recommended this one was Kelkar Committee. Don't forget. See the date. That is 2005. That is 2000. Before that also committee was there, but Kelkar Committee is very important then. Next, we have studied about the GST Act and a legal framework. Okay, this is very important. You should know what are the act: CGST Act, SGST Act, IGST Act, and Compensation to State Act. Next, we have studied about a GST network portal. We have studied about GST network portal. We have studied different tax rate which is there. What tax rate or tax slab is there? 0%, 5%, 12%, 18%, 28%. Okay, 18, 28%. Next, we have also studied that some changes government are doing. Next, we have studied what are the taxes that has been subsumed under the CGST. Kindly go through it. It's already has been marked here. It's very important. as it is the basic class, so we are I have tried to keep the class in the basic mode. So input tax credit is also we have studied. Okay, I have given you the with example. I have tried to make explain what is this input tax credit. Next, this is what was the tax which has been subsumed. So we can say that GST, one nation, one tax. Next, we have studied the difference about GST and VAT. Hope this difference was very clear to you. Okay, and last, thank you very much.